David Carlson, private equity as an asset class has outperformed both stocks and bonds in the past decade. Do individual investors have enough of it in their portfolios?
Well, certainly, Greg, I think historically investors got access to private equity through their pension plans. I think the transition we've seen in the retirement market, where things are transitioning from defined benefit to defined contribution, and individual investors are left to make their own choices. Private equity is a difficult asset class to access for individual investors because of the high initial investments that are required, the longer lockup period. A lot of people have concerns about the transparency as well. So I'd say we're seeing a transition where it's becoming harder for individual investors to access private equity.
So how does AMG Funds recommend investors get enough of it in their portfolios? Buy funds, invest in little businesses? What should they do?
Well, certainly we would recommend folks work with an advisor. I think the liquid alts and the traditional alts space are complex, and not a lot of people understand it. So I think the value of having an advisor work with you there is a big benefit. And we recently launched the AMG Pantheon Private Equity Fund, which really tries to get at some of those hurdles that I mentioned. So for accredited investors, it lowers the initial investment, creates some liquidity there, although private equity is really intended to be a longer-term investment. And it creates a diversified portfolio of different private equity managers.
What about the idea of buying stocks of companies like Blackstone or Fortress or KKR? Is that a good idea?
It's certainly the way some choose to access private equity, but we would say that's not really true private equity. What you're really getting there is access to the earning stream of a private equity company, not necessarily the actual deals that they're doing.
Can you talk about the liquidity factor one more time? Because in 2008, anyone who was involved with private equity had a hard time getting their money out, including some of the big names that I just mentioned.
Well, certainly, again, private equity is intended to be a long-term investment. This fund does have some mechanisms for liquidity, but if you think about the patience that's required in private equity, if you look at one of the bigger deals that's been done in recent memory, the Hilton Hotels deal, that started in 2007. Through the financial crisis in 2008 and 2009, people were saying this is the worst deal ever made. Fast forward, they can be patient. Fast forward several years, and now it's one of the biggest profits ever made in a private equity deal.
And how much of a person's portfolio should they have in private equity? Because there is a little bit of a liquidity concern. So how much should you put in? 5%, 10%?
Well, yeah, certainly it should be for your long-term money that you're not planning on accessing for several years. We're seeing the average U.S. pension is allocating about 8% to private equity, and that's been steadily increasing. The larger pension plans like CALPERS, CALSTRS, New York State, they probably have closer to 10. And then you look at endowments where liquidity isn't as much of an issue. The big ones like Harvard, Yale, they're allocating as much as between 20 to 30%. So obviously we don't think that's appropriate for an individual investor, but again, that's probably something they should talk to their advisor about.
And then finally, what about costs? Because some of these endowments, they can afford to wait that long, and they can afford the cost of getting into a private deal. What about individual investors?
Well, I think the way to evaluate private equity, certainly the fees are higher than they are in public equity, but the returns justify it. As you mentioned at the start, private equity has outperformed a number of different asset classes over pretty much any trailing time period that you look at. So if you evaluate private equity on a net of fee basis, it's still generating pretty significant excess returns.
All right, thanks a lot, David.
Great, thank you.
Thank you for watching The Street.